Ladies and gentlemen, hello and welcome to another episode of The Cautious Trader. Today I just wanted to bring this quick video to your attention. I already recorded this, but unfortunately the audio didn't record, so I'm doing this again. And I wanted to say in our last episode I mentioned that the Bitcoin bubble has finally popped and we are in this new downward trends. And again, none of this is financial advice. Like to give my disclaimers. But as we are heading into this new area, we are seeing this trend reversal happen right before our eyes. And I say this because primarily what we are noticing is a downward channel being created, which will put us more or less headed for this green line here at the $41,000 level, which meets this moving average beautifully right around the same area, maybe first stopping at the 44 to $45,000 range, which is also an area of previous support, so it makes sense for it to become again an area of support. Why do I say that the trend has reversed finally? Some people may disagree with me, but I like to say that trends begin to reverse when we see declining RSIs. And let me bring a clear chart so we can see this in a more uh, simple fashion. Trends begin to reverse when prices go higher and higher, make new higher highs and higher lows, while volume is declining. RSI, which is the strength of the market, is also declining. And when both of these are declining yet prices going higher, then a trend reversal is about to happen. Unfortunately, you never know when exactly the trend reversal will take place. You could have said it's going to take place here, or here, or here, or here, here, here. And finally, this happened at this location right here. This is why bull markets are sometimes harder to trade and bear markets are beautiful for trading. In a bear market, you know the previous levels, you know exactly where price is headed, and there are no surprises, right? The only surprise would be the curiosity at which the price may drop, but the levels will remain consistent. And historically, we have seen this happen before back in 2017 and also in 2020. In 2017, when the bubble broke, we saw these levels of support and resistance play over and over again. Right here around the $6,500 level was a major area of support. Every time Bitcoin dropped to this level, it bounced right back up. So people could reliably set their targets to buy into the market at the $6,500 level and then sell out of it by 10, 20%, who knows, whatever they were comfortable trading. And again, we see this Bitcoin coming to support, bouncing, coming to support, bouncing, sometimes breaking below it, but consistently trading near it. Until finally in November of 2018, it broke below this level all the way to the $3,000 range before heading back up. And it was during this time that again the levels were known so people could trade them. But when we entered another bearish scenario from June of 2019, again, these levels remain consistent and people consistently could have traded them until there was a significant change. And then again, you start trading the new setup that has been put forward by you. But remember when I talked to you about the bullish scenario reversing, now here we can also notice the bearish scenario reversing. As for instance, we had this significant uh, downturn right around here. Before this time, we were seeing that price was declining very quickly, and RSI was more or less also declining with it, but the volume was also declining until there was a significant low here. And this is a bit of an anomaly, but if we were to look at before it, right before it, the RSI was increasing. We can look here as the price was declining, and trend did reverse eventually, and once it reversed, we were noticing higher highs and higher lows before the COVID situation, of course, took everyone by the storm. Uh, so yeah, that's been it. I do believe that this will come down to the 41, $42,000 range uh, before making a significant bounce up. And when this happens, uh, we are also going to be sitting right around this area of support and resistance, around this range, 43 to $45,000, and also a little bit lower around the $40,000 level. Um, so you could be putting your um, entries around these areas and your exit points a few percentage points above them. With that said, I like to close this episode off right here. And if you have any question, comments, leave them in the comment section below, and I'll get to you in the next episode. Thank you and goodbye.